Welcome to the Franchise Masters podcast, where aspiring entrepreneurs learn what it takes to find, buy, and build successful franchise businesses. My name is Drew Carpenito, and I'm your host as we dive into these fascinating behind-the-scenes stories of people who have used surprising franchises to create massive success. I'm glad you're here. Let's dig in. Welcome to the Franchise Masters podcast. Today, I am joined by Tony Cortina. Tony is a corporate refugee from the banking world turned serial franchise entrepreneur with a keen focus on acquiring existing franchises, turning them around and growing them. And he can't stop. Can't stop. So Tony, welcome to the Franchise Masters podcast.
Thanks, Drew. Glad to be here.
I remember you and I got connected a while ago on your second venture, which was SuperCuts. But prior to that, what was your story? How did you get into franchising?
I love the term corporate refugee because I think that's a pretty accurate description. So I had spent a good portion of my career, probably almost 15 years in banking, and all different roles within the bank: small business, medium-sized business, large corporate. Kind of done everything, and I ascended the ladder to middle management, which is probably where I made the realization that I didn't want to work for anybody anymore. I think it's when you're an individual contributor, you aspire to kind of be the boss. And then once you become the boss, you're like, oh man, this is tough because I've got to balance, the loyalty to my team and also, the wants, needs, and objectives of the hierarchy above me. And it's a difficult place to be if you've been a solid individual contributor yourself. And then also just, again, you're balancing that loyalty between your team, your employees, and at the end of the day, your bosses and the people who are going to determine your future. So that was kind of where I started to really think about doing something else. And there was a friend of mine who I'd known for a long time, and we were just out grabbing a beer, happy hour, and kind of funny. All the bankers all know one another because they've all worked together or have switched and gone to other competitors at one time or another. And he was just joking. He's like, you're never going to be happy until you work for yourself. And he was 100% right. So that's kind of what got the gears turning. And I just started looking at going out on my own. You'd asked about franchising. I'm pretty good at business development, kind of a jack of all trades, master of none, but definitely not smart enough to come up with anything on my own. So that's why I started looking into franchising. And that's where I found an existing franchise that was for sale. That was the other owner kind of just decided to move on, and he'd taken it as far as he could take it, and it needed a little help. And I was in the right place at the right time. So I took the leap, and that's what I did.
No way, man. So what was that like? Did you know
Scary.
kind of right away?
Really
or
scary.
Had you vetted a bunch of deals before the one that you found?
So yes. Yeah. So I looked at a couple of other deals. So some of them were franchises, but they were like de novo or startup franchises in industries that either I didn't have enough capital to invest at the time. Like if you wanted to do, let's say, a fast food restaurant, you've got to have a 7-figure net worth. Well, at the time when I'm 38 years old, I definitely didn't have a 7-figure net worth to pull that off. Or it just wasn't in necessarily like an industry that I was terribly interested in, right? And so I found one. It's called the Cleaning Authority. They're headquartered in Columbia, Maryland. And this one just kind of seemed to be like the right fit for me anyway. As a banker, you really start to understand fundamentals and what makes certain companies work, right? And what I liked about the Cleaning Authority model is it was recurring revenue. There was low overhead, so you don't have a ton of investments in fixed assets, and really not carrying a whole lot of inventory or receivables, right? So it wasn't terribly capital intensive, but I really loved the recurring revenue model. And the Cleaning Authority as a franchisee had a really good management team in place, really great technology, and it was scalable. And the territory size was great. It was much larger than some of the competitors. I just decided to take the leap. I said, you know what, I'm going to be 40 years old at this time, and my kids are still young, and this is the only time I'm going to be able to do it, because as they get older, as they start getting closer to college age, my risk tolerance is going to continue to decrease. So that is when I made the leap, and that was 2017.
2017. Okay. So there were certain businesses that you couldn't get jazzed up about, but you got jazzed up about residential home cleaning.
Yeah. And so it was funny because I didn't really think I'd get excited about that, right? I mean, it's not a terribly exciting business, but I started to think about like, my own needs, right? So married, 2 kids, dog, and my wife and I both worked, right? So there was like no time to clean the house. And so we had a cleaning service for years. I knew family members that had cleaning services, and I knew friends that had cleaning services. And pretty much I realized just about everybody had a cleaning service at one point or another. So it was definitely a service that was needed. It was in demand, and it wasn't dominated by any one huge Goliath, right? I mean, so for us, for example, at the Cleaning Authority, I mean, we are the largest residential cleaning company in Rochester, and that's with like 2% market share, because there's just so much business to go around. So as I started thinking about those fundamentals, and the cash flow was good, and it wasn't like I was going to have a ton of overhead. It made sense. So yeah, I guess I got excited about all the other stuff, and it just so happened to be a cleaning company.
Yeah, it was funny when I started in franchising. This was probably 2007, 2008. I was with Advanta Clean, and we were trying to figure out how to expand this thing through franchising and get connected with good people. And we started going to these trade shows. And one of the first companies I met was the Cleaning Authority, and it was Sexy Wexy. And I'm like, I knew nothing about franchising. I was still learning about it. And I'm like, residential cleaning, I don't get it. And I remember Wexler took me through their business model, in like a 5-minute pitch. And I'm like, you guys you're that good at the direct marketing in terms of like they print, they used to print all their own the direct mail, the stuff that you get in the mailbox. And that was tried and true. And these guys were more than a cleaning company. They were an amazing advertising company is kind of what it boiled down to. Yeah. And then they had all this sophistication with the software platform, and I think they had a call center and all this stuff. And my mind was blown. I was like, oh, okay, now I get it. But anyway, so the Cleaning Authority has been kind of one of the leaders in the space over the past 10, 15 years, right?
I think overall, if you take the entire network, we're now the largest residential cleaning company in the entire country. And, and we do that really without a ton of brand recognition, in the sense that the offices are not required to have company branded vehicles. And we don't do like a ton of I don't think we do any television advertising or anything on Spotify, right? It's all through direct mail and digital. So it's very targeted, and we'll hone in. When I say our team will hone in on who our particular customers are. And, we spend quite a bit of money on it, but we're able to acquire those customers and
just hammer them, right? Hammer them until they tell you to stop calling or sending me stuff.
Yeah, well, it's, I've got, I finally got your mailer now for the 8th time, and I decided to call you. And I think they have the data that says after somebody gets it 6 times, they usually pick up the phone and call. Whereas like some of the other brands like Molly Maid or Mary Maid are 2 of them, right? They have higher brand recognition because their offices, they're required to own vehicles that they drive around, and they're branded. So a lot of people see them. But as far as like an overall revenue size, their offices aren't really as large as ours are. And I've since invested in vehicles. So we do have company vehicles that we use, and it's just a additional form of marketing and helps raise some local brand recognition. But yeah, we're very, very targeted in what we do, and it's effective. And it's crazy too to see how it's just evolved over the last 5 years, whereas we are very heavy, almost 100% mailers. And now we're moving more towards the digital realm, right? So paid search and pay-per-click, and really Google local service ads are kind of the home run, really good return on investment of those as well. But we got a diverse marketing team, and we got some really smart people in Columbia that do that work for us, and we pay for it, but I could never do it on my own.
Yeah, well, the numbers work.
I mean, maybe I could do it on my own now, but I couldn't do my own 5 years ago.
Yeah, good point. All right, so on that deal, so you had an existing Cleaning Authority franchise in Rochester.
Yep.
For anybody that might be listening who's thinking about doing, looking at an existing business or franchise for sale, like, are there any nuggets you can share about how you vetted that deal to figure out that it was the right thing for you?
Yeah. So, for me, being that I'd spent so much time in banking, the first thing I look at is the financials. I go right to the income statement and I look at the historical financials, and I want to take a look at the revenue trends, and I want to take a look at the margins. And then if anything jumps out, obviously I'm going to ask questions about it. And if I had any concerns, that's the time to address it. So for me, that's the first place I'll go. You can take a look at the balance sheet, but again, the cleaning company is not really asset heavy. So there wasn't a whole lot there. But that was the first place that I went. And then afterwards, I did a Google search and I took a look at their Google reviews. And at the time, there weren't a whole lot of them. And again, that's amazing just to see in the last 5 years how that space has evolved as well. But that's kind of how I did my due diligence. And I was very prepared when I had my initial meeting with the seller with a list of questions. And again, that goes back to my time as a banker. Like I just treated it like it was like a prospect call, somebody I was trying to bring in as a new client, asking really good questions and then following up. He knew that I wasn't like a tire kicker. I was genuinely interested in the business. And, because of that, he was much more willing to invest time in answering those questions and spending more time with me as I was doing my due diligence, because, being it was the first thing I was ever going to do. And I was leaving, a really lucrative career. I mean, I was doing very well. I was very comfortable making good money. And, in order to make that leap, this really had to make sense. So because I built that rapport with him, he spent a lot of time with me and we were able to kind of move it along. Whereas a lot of other people I think would call and you probably even see this in your space. You talk to a lot of people on a regular basis where they're tire kicking or they're just asking questions. And usually within their first 5 or 10 minutes, you can tell if somebody's serious or not. But I was just very, very well prepared when I did my initial due diligence. And that helped to get the thing right off the ground and definitely lent some credibility as well. If you don't have that background, right, start talking to banks, right? Is find a good lender and talk to them and they're definitely going to have questions for you and they'll probably help you get some questions that you should be asking and hopefully have answered. And if you don't have a CPA, definitely find a good CPA right out of the gate because that's going to save you a whole lot of trouble down the road. And they can help you with some of your due diligence as well.
Yeah, for sure. Yeah, it's really good advice. Like with your background, it was kind of natural for you to kind of know what questions to ask and stuff like that. But taking a look at the historical performance of the businesses, that's the advantage of looking at any kind of existing business is that it's there, right? Versus looking at opening a new franchise, you've got to kind of build the projections and whatnot. And you mentioned it, which is it was subtle, but it's a big thing, in that you gain the respect of the seller, where it's not just a one-way transaction. Like, oh, I'm the buyer. I expect you to give me all this information because I'm the buyer. Blah 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 blah. You earned it. Like you got the respect, and it's an emotional it's an emotional deal from your end, and it's also an emotional deal from the seller's ends too, in terms of them letting go of this thing that they've spent a lot of time and a lot of blood, sweat, and tears building. Yeah. So there's there's the personal piece of this thing that's really important.
Well, and plus they're sharing tax returns and in some cases bank statements. I mean, that's all real personal stuff. So yeah, that's a really good point. You mentioned it being an existing franchise. Like for me, at the point in my life and kind of where I was, that's what I was kind of willing to do, right? But I know so many people that have been successful that just took the leap and said, you know what, I'm just going to start this from scratch with no customers and no revenue. And I give those people all the credit in the world because I'd like to consider myself a risk taker, but I don't know if I'd have the guts to do something like that. But who knows? I don't know.
Yeah, well, I'm sure you paid a little bit of a premium for the existing piece of it.
But to me, it was worth it. So
yeah, no, for sure. There's trade-offs, right? So when you were doing your due diligence, or maybe when you took ownership of the business, like, did you feel or did you know that you had the opportunity to grow it, or were you just going to plan to take it over and just kind of keep it like on the same course that it was on?
So you mentioned Eric Wexler. So he happened to be the business development person at the Cleaning Authority, and so I talked to Eric quite a bit, and he had connected me with some other owners in similar sized markets, and I was able to talk to them and recognize that there were some things that the owner had done really well, and there were some things that he really needed to focus on to improve. And talking to some of those other owners and kind of figuring out what it was that they were doing to be successful, and thinking to myself, well, I can do that. And, some of them were really simple things and some of them were a little bit more complicated, I guess. But at that point I said, you know what, I'm ready to make the leap, because it was at a point where even if I sustained it, it was fine. It was a decent income and I was my own boss. But the opportunity to grow it in the way that we've grown it over the last couple of years, it was just I guess an added bonus, but it was something I was confident that we could do after talking to other cleaning authority owners. And these are people that have been in the network, some of which were probably going on at the time, 20, 25 years. These were long-term owners and they've done it all and seen it all. And a lot of people I talked to were long-term owners, right? That they very few people flamed out. Most of the people had hung on to it. They've been there for a long time and they were just, the great thing, actually, most of the people I talked to, they weren't in their office. They were like playing golf, or like one person's like, oh, I'm meeting my buddy. We go to the bar and play darts every Wednesday at 2:00 or something like that, right? So they were kind of doing all the stuff that I wanted to do, right? Which is one of the spoils of being an entrepreneur, is like you work really hard, you put in a ton of hours early on, so down the road you don't have to do those things. And so the fact that those people were doing that just kind of reinforced to me that it could be done and made the decision that much easier.
Yeah, I can imagine. So do you mind me asking, what were some of the things that you saw the opportunity for that the previous owner could have been doing better?
Yeah, the most important thing, I guess, was just taking a look at like the profit margins, and the profit margins that the other owner was realizing were about 5% lower. The gross profit margins were about 5% lower than the average cleaning authority office. And there were a handful of things that, looking at the way he was running his business, the way that he was scheduling his customers, some of the things that he was doing with his insurance, some of the ways that he was staffed, just didn't really align with the way some of the more successful offices were operating. And I'd asked him flat out, I'm like, well, how come you haven't done this? He's like, I can't do it. It can't be done. We can't do it. And I'm thinking to myself, all these other offices are doing it. How come you can't do it? And it just turns out, I think there's kind of sometimes there's a fine line between can and want, right? And I think he said he can't do it, but in reality, he probably just didn't want to do it, right? And because sometimes that involves having really difficult conversations with long-term employees, really difficult conversations with employees in general, being much more flexible with your customers, and just even like paying your employees, right? Is just the process that he was using to evaluate his employees and grant them raises. Like, employees basically had to beg to get a raise. And I'm just thinking to myself, like, man, in this business, your people are your product, right? That's everything. If you don't have good people, you don't have a good product. And so, like, right out of the gate, I gave people raises, and then we put a matrix in place to allow people to, if they hit certain target metrics, they would get raises. And we were doing them at the time, we were doing them twice per year. And what I found is the more we paid people, the better quality employee we had. And the better quality employee we had less customer terminations, and we had better productivity, and we made more money. So it was like a really simple thing, right? But sometimes it's counterintuitive, right? Because if you're just looking at numbers and you're saying, well, I can't afford to pay these people more money because I'm going to make less money. But the reality is, if you pay people more money, sometimes you're going to get better people. And if you get better people, you're going to have a better overall company, better overall product. So that's what we did.
Well done.
And it's funny now we don't even do, it's different now, obviously, with the job market being the way that it is, the labor market being the way that it is. Wages have increased substantially, but even now, like, we'll just take employees that, after a couple of months, if we feel like they're doing a good job, going above and beyond, like, we'll give them another raise, because they've earned it. It's important to be proactive like that sometimes.
The people, especially in the service business, right? It's the
100%. Absolutely. Yep.
Yeah. Interesting. Were there any skeletons in the closet? There were little rut rows that reared their head after you took over?
There was just one so when I bought the company, there were two long-term employees. There was like a manager and a quality inspector. And there was just some things that the quality inspector was doing during working hours that, I was kind of shocked to find out. And apparently it's just been tolerated for a very long time. And it took me about a month to figure that out. And I terminated her, right? And it's really tough to be the new guy to come in and terminate this person who'd been there at the time, I think, for like 12 years. And, there was some employee backlash because there was some people that she was very close with, but at the same time, it was just clear violations of our company policies. So that came as a little bit of a shock. But the good news is the other manager that had been working the business has been there now. She's going on 17 years, and she's phenomenal. I mean, she's absolutely phenomenal. It's very,
17 years.
Yeah. So she started out as like a cleaner, and now, she was kind of like had worked her way up to a manager, but she was kind of more of like an assistant manager, where the old owner was still working 80 hours a week, doing a lot of stuff that he probably didn't need to do. And, I, over the last 5 years, have just given her increasing amounts of responsibility as she's earned it. And she's just done a phenomenal job. So if you can buy an existing franchise with an existing manager that's capable and been there for a long time, that is worth its weight in gold.
Wow. Did you have any idea? Like, did you think did you see that as a big potential benefit when you were doing your due diligence and vetting it? Or was that something that kind of...
I did. No, I did. And I was also worried that she was going to quit, right? Because there was some new person coming in, and she's got to train this new owner, and, not sure if the personalities are going to fit. But no, it's worked out great. So she's an awesome employee. Very lucky.
17 years. That is no joke, man. That's cool. Yeah. That's awesome.
Yeah. Yeah.
Well done.
And I think she's like 10 years younger than me. So she'll be around until I retire. Maybe she'll own it someday. We'll see.
So it sounds like the cleaning authority was kind of the combination of, there was a good business, maybe not great, maybe, and you felt like you had the opportunity to make it great with, some, without doing a major overhaul. Still a lot of work, but nothing crazy that you had to turn around. And you had a quality franchise system as well. That
great franchise system. And I was really fortunate too. So there were the cleaning authority at the time had these operation representatives that you kind of get assigned. They would get assigned to your office. So I had one official franchise or ops rep, Tim Bridges, and another kind of unofficial who I'd latched onto because he was from Rochester, where I am, Pete DeLorme. And they were like instrumental in helping me through like the first 3 to 6 months. Right. So there was like a combination, like business coach, business consultant, and like psychologist. Because I call them and like, oh, what the hell? You're never going to believe what happened today. Right. And the funny thing is they usually do believe what happened that day because they've been there, done that. And there's just always some crazy things that tend to happen in this space. But they really kind of helped me through those 6 months. And they're just awesome people, and I'm really lucky to know them. Helped me get to where I am today.
Yeah, that's awesome. So you leaned into the support that was out there for you.
100%. Yeah, we thought it was there. 100%.
Awesome. So you didn't stop there, huh? So one business that you bought, one existing franchise you bought, and got it, kind of got it to the next level. Wasn't good enough, huh? So that's where we got. I think this next chapter
that's
in the
how
story is where we got connected. So what was your next venture that you got involved with?
Well, so I wasn't like actively looking for another opportunity, but I was just kind of wanted to see what else was out there. And I found the cleaning authority, the office. It was listed by another broker on Biz Buy Sell. So I would occasionally go on Biz Buy Sell, and I still go on there just to see what's out there. And sometimes I'll try to guess. I'll look at a profile and see if I can guess what the business is, see if I've known them or either as a customer or if I've worked with them in my career in banking. And so there was like this really general listing for like salons in the Rochester market, and it didn't give the name, and they were well established and all this other stuff. At the time, I'm like, I don't know who this is, but I'm gonna look into this. Right? It's a salon. This is kind of cool. It's different, right? I mean, I don't have to know how to cut hair because I think it said like, it didn't say absentee ownership, but it was implied that, you didn't have to know how to cut hair to run these. And I filled out all the stuff, and you called me and we talked, and then you called me back and you're like, oh, I just talked to them. And, as it turns out, and it was SuperCuts, as it turns out, it was SuperCuts. And I just talked to them. And, as it turns out, there's so many people that were interested in this that they're going to hold off. They're not going to sell it. And I'm thinking to myself like, oh, which bullshit. Like, I guarantee this guy just got my info, and now he's going to start peppering me with unsolicited emails for all these other franchises he's trying to sell.
The old bait and switch.
You swore that wasn't the case, and that they were like super overwhelmed with prospective franchisees. And as it turned out, you were correct. You were not lying. And you said, I'll call you back if this comes back around, and I think it's going to. I'll call you back. And I think we originally probably talked in like the early part of the summer, like May or June. And I think by August, you called me back and said that they were interested in entertaining other franchisees. And you introduced me to Mike Welch, and like we hit it off on the phone like right away. And he's like, "We're doing a discovery day in Minneapolis in 2 days. Can you be there?" I'm like, "Sure." Right. And I've got a manager at the Cleaning Authority. She's doing a really good job. I hopped on a plane and went out to Minneapolis and met Welchie and stayed the night. And yeah, I was originally only going to buy 3 SuperCuts, and that turned into 16.
You have 16 now? Oh my gosh.
Well, 16, and then we have 13 now. We closed a couple during the pandemic. There were some leases that were they were maturing, and they weren't really. They were kind of like, it's not that they were underperforming stores, but like we didn't need as many. 13 was a really good number. We could probably open 1 or 2 more now in different parts of the Rochester area. But yeah, so 13. That's what it was. Well, 16 at the time, and then it was 13 now.
Yeah, it's funny how our worlds got connected. But so the backstory here is Regis Corporation was getting out of the operations side of the salon, all the salons that they had been operating. Yep. I think they got a new president or a new CEO that kind of said, "Hey, we're getting out of the operations business. We're going to focus on being a franchise company." Was kind of the general gist of it. So they sold off their corporate portfolio over a period of a couple of years. So which is it's pretty rare. You don't see that very often.
Yeah.
I mean, there was every week the information changed and all this kind of stuff. But so this was a completely different deal than an independent owner selling the business. This was a large corporation that was offloading their stores. So like in terms of like the due diligence, was it like, how was it different? And how did you go about figuring out if these things were a good deal or not?
So that one was a lot different because, you're not relying on like audited financial statements for each individual location or tax returns. You're basically taking these internal financials that Regis had prepared, and they sign off on it. Their finance people say, to the best of our knowledge, that these are all accurate. But there wasn't as much historical data to go off of. You were really just looking at the current financial performance and the operating margins and saying, okay, this is the price. And at the time, Regis was very much like a take it or leave it, right? We've got people lined up out the door to buy these. It was different in the sense that you really had to trust that what you were looking at was accurate. But we were also, in our case, buying salons, some of which have been in existence for 30 years, right? And I'd been to a lot of them before too. So I was familiar with their location and the quality of the services they provided. But it was different because you're dealing with this large, at the time anyway, they were a Fortune 1000 company. And the people there were great that we were dealing with. They were super helpful, and they gave us a lot of information that when we needed it. But putting that deal together, structuring that deal from a banking standpoint, if you're relying on SBA financing, which, unless you're coming to the table with $5 million, you're going to need some SBA financing to cover that collateral airball. That's not typically how an SBA deal works. So fortunately, I found a really good banking partner. Live Oak Bank is the best. I will tell you, hands down, they are the best bank in the country to deal with. And they really helped us with they really understood the business. They were able to process the financial information that we were able to provide to them, and we were able to get the deal done. So it was, it was a little bit different because you're carving out these small portion of a really large business. But find that good banking partner, and they make your life really easy.
Yeah, if you get into the resale world, Live Oak comes up all the time in the franchise resale world.
I am not a paid endorser. I could just tell you that they're just phenomenal bank to deal with.
Yeah,
like miles above anybody else I've ever dealt with.
It's funny you say that because my buddy, he just acquired. He went from 5 SuperCuts to 15 in 12 months, and they were the 10 new ones were existing. SuperCuts, and he used Live Oak, and now he's on like a
Yep.
first name basis with him. So he makes a phone call, and it's a lot easier to transact than dealing with
they're
other
they're
banks.
so responsive. Their technology is second to none. Yeah. Lots of great things to say about them.
So was that 2019 when you closed on the SuperCuts?
Yes, it was. It was 2019, and then on the 1-year anniversary of closing on our first store is when COVID hit, and we had to close. I'm in New York State, so our brilliant governor, who's no longer our governor, forced hair salons to close for 2 months.
So what was that like? How did you fight through that?
Sucked. It sucked. I mean, it was a really scary time, especially considering, we were doing so well and the business was humming and we were in such a great place. And then that happens, right? And you just like, shit, what is going on here? And there's so many, and listen, we all live through it in different ways, but in my case, it's like, okay, I've got 2 companies. I've got all these employees. I've got kids at home that can't go to school anymore. Is the world ending? Like all this other crap, right? And yeah, you just kind of put your head down and you figure out a way to plow through it.
And there's no roadmap for that. That was a figure it out as you go.
There's no roadmap for that. I will say that, the PPP program certainly helped tremendously. The SBA was great to work with during this process. With SuperCuts, we have, so Wegmans, do they have Wegmans down where you are?
Not yet. Well, close. They haven't made their way to Charlotte
so Wegmans
yet.
Wegmans is headquartered in Rochester, and we have a couple stores and a couple other plazas, and they're just like such an amazing landlord. Like they were great to deal with. Some of our other landlords were total pricks, and I would never want to do business with them again. But like Wegmans was just great to deal with, and we got through it. And the business is profitability is great. Our volume is still not back to where it was pre-COVID, but that's because the landscape's changed. There are still people who have not been to their office in 2 years.
Right.
And there are other people who still are afraid to leave their house. So the landscape's changed a little bit, but we've adapted and we've gotten through it.
So pre-COVID, when you guys took over the SuperCuts, were there things that you were able to kind of see and did you see a lot of room for improvement once you kind of got in and started, operating a little bit more? Or did you just kind of keep it on the same path that it was before?
So yes and no. We hired one of the district managers from Regis, and she had been with the company for, at the time, I think 27 years, Janice, and she's like lives and breathes SuperCuts. So I'm in my 3rd year now, and she's probably forgotten more than I know about, how SuperCuts are run. I have a business partner with SuperCuts. He's a really good friend of mine, and it just kind of started out as a joke that he wanted to partner up, and I told him no. And then as the opportunity grew, I brought him in, and we ended up buying all of them. We got a great partnership. But Kyle and I really give Janice a lot of autonomy to run the business the way that she has in the past. And then, we just made like some slight improvements, like little things where, Regis was paying their employees bi-monthly. We pay them weekly. We try to do a little bit more around staff recognition. We're not always great about it. Those are things that we really need to improve on. We freshened up the stores, changed the paint colors, just cleaned them up a little bit. And then just really tried to hone in the operations. And that's where really your big opportunity is in that space, is you want to make sure that your labor costs are aligned with your peak volumes, right? Regis was keeping the stores open until 9:00 at night, and they had a lot of dead payroll, right? There were people who were not coming in the stores after 8:00, but they were paying 2 employees there to close. So we tightened up some of the hours and tried to be a little bit more efficient with our staffing, and it's paid off. And same thing, we gave everybody raises too. Last year we gave everybody significant raises, and we raised our prices, but I mean, we really almost all of the price increase was absorbed by the increase in wages. It worked out great. I mean, we haven't seen any decrease in foot traffic, and the employees are happier, and any of the customers who said something about the price increase, we made it very clear to them, like, hey guys, we're passing this all on to you. And they would share that with the customers, and everybody seemed to be okay with it. So
you have a golden touch, Tony. You have a golden touch, my friend.
It's really just dumb luck. I swear. That's what I tell people too. And it's so much of it is luck. The other thing too that we are doing too, though, is we're trying to refine our marketing. SuperCuts is a really strong brand. They're kind of like the name in kind of walk-in salons, but their marketing really hasn't been all that great, or really hasn't been all that prevalent. So we're trying to do kind of similar approach that the cleaning authority does. We're trying to be really targeted with our marketing and be really efficient with how we're spending our money. We'll see how that goes. We just rolled it out. We're in the process of doing it right now with a local firm that we're working with. So I'm optimistic that it's going to go well.
It's kind of ironic, right? Like young, emerging residential cleaning franchise that understood what moved the needle in their business and got really, really good at it with the marketing and advertising. Probably, toe to toe is, aside from the brand name effect, probably better customer acquirers than it sounds like than SuperCuts was.
Yeah, I think to a certain extent there's some truth to that. I think the other thing too with SuperCuts and with Regis at the time, right, is like I think they were owned by a private equity firm and they were like totally in growth mode, right? So they were just trying to get as many stores opened as possible, and picking the right location. If you've got a good location, you don't have to do any marketing whatsoever. People are driving by, seeing that sign, and if it's in a convenient location, it's going to do well. What they maybe lacked in kind of marketing prowess, they certainly made up for with some of the their real estate selections, and that really helped with that growth. Now, Regis is, since there's new management in place, they're replacing the old marketing folks, and we're pretty confident that they're going to put things in the right direction.
Yeah, good.
But no, that is a good observation. That and part of that too is cleaning authority was at the time much smaller operation and much leaner, much more nimble.
The theme that continues to weave throughout what you said is the people, right? Like take care of your people. Don't be afraid to pay them more.
100%.
Obviously, understand your numbers and understand your margins, but the people piece, and don't be afraid to promote people, that are demonstrating the interest of being a part of the company and giving them a chance to see what they can do. It's simple, but you have the people skills to be able to, I think, help pull that off. And the leadership skills, right? So, no, but that's, there's a lot of wisdom in everything that you've shared. So I'm going to ask you two kind of closing questions. First one is, for anybody who's, thinking about buying an existing business or buying an existing franchise, what are, the one or two pieces of advice you might have for them?
So I think the cliche thing to say is just do it, right? Just go do it. And I'm not going to say that. I'm going to say do it, but with the caveat that, you have to be prepared to fail, right? So go into this saying, okay, here's how much money I can afford to lose. Here's how much time I can go without, bringing in income, right? This is what I can do without like significantly impacting my family's way of life. You've got to be in the financial position to take that risk, because a lot of times, some of the best ideas and some of the best companies, they fail because they run out of time or they run out of capital. So you got to make sure that you're in a position that, you're not going to be bringing in a ton of debt. You're not going to be living off that debt, right? You want to make sure that you're in a position to put in as much equity as you can, cover your expenses, and then make sure that your repayment terms are stretched out long enough that you can kind of afford some lean cash flow, at least early on. That's going to eliminate a whole lot of stress. And then the other thing I would say is don't buy the first thing that you look at, and honestly, like, don't even, sometimes just start looking at stuff. It's going to go against what I said earlier, but go in as a tire kicker, right? Start looking at things, start talking to people, start looking at concepts. It's really important to have kind of things to compare it to, right? So you can see what you like about certain ideas or certain concepts, things that you don't like. And for me, it was a long process. I mean, I was probably looking for 2 or 3 years before I made the first jump, and it helped me get into a situation that I knew was going to be successful. I shouldn't say new, but I was pretty confident it was going to be successful. I don't think I would have been prepared to do that if I just jumped at the first opportunity that landed in my lap.
Yeah. So you had reps under your belt. You had a background that helped, but you also had, you'd kicked the tires a little bit, gotten familiar with what the process would be like, so that you weren't surprised when you got engaged with a business that you were interested in. You were kind of, you had some reps under your belt, and you calculated risk, right? Is kind of what I think I also heard you say, in terms of just like, being able to size up the risk factors and also the upside, and, weigh them both to figure out if it's the right thing for you or not. And then there's always a little bit of delayed gratification going into any business venture. So, And
then the other thing I would say is, early on in the process, find a good CPA and find a good attorney. And when I say find a good one, don't ask like your friends, oh, my buddy does this, or my buddy's a CPA. No, like ask some of the businesses that you frequent, maybe some of the larger businesses, or anybody as a business owner, ask them who they use, right? And if they've got a good, successful business and they've got they've probably got a pretty good CPA, it might cost you a little bit more money, but it's worth it, early on. And then obviously you find yourself a good attorney. The funny thing is just about every attorney will read a franchise agreement and they'll just say, listen, this agreement, there's nothing you can change in this agreement, or the franchisor will tell you there's nothing you can change in an agreement. So feel free to share it with your attorney. But there's nothing you can change about it anyway. But the attorney will always go through it and it lets you know what some of the risks are and exactly what you are signing up for. Right. And it's just good having that person to lean on and gives you a little bit of peace of mind that you know exactly what you're signing. And because I've read through the franchise agreement, and after a while, your eyes just start to glaze over because they're so long and so repetitive.
And there's not a lot of it's completely one sided.
100%. Yeah.
You nailed it. But yeah, 100%. I mean, you nailed about like finding, and what you said is there's a lot of wisdom in how you get connected with the right team of people. Is ask other entrepreneurs, other small business owners, and who they use, because a good accountant should help you make whatever fee you pay them back by some sort of X factor in tax savings and all kinds of stuff. But the key is they need to, at least what I found is they need to understand your personal situation as much as your business situation too, so they can help you mesh the two together to take advantage of some of this stuff.
And to that point too, definitely find a really good insurance agent as well, a good insurance broker, somebody that's at like a good sized commercial firm that's got the marketing team behind them that can go out and they can shop your policy, and God forbid you ever do have a claim, that they can handle it for you and handle it efficiently. And then also make sure you get employment practice and liability insurance. Now, I'm fortunate, I have not ever had to draw on this policy, but that EPLI policy, it covers you in the event that somebody wants to sue you for a range of potential offenses that you could have, or one of your employees could do to another employee. And really important to have that insurance in case an unfortunate situation like that does come about. Hasn't happened to me, knock on wood, but I know other people that it's happened to, and they are very grateful to have that insurance.
So you like the independent insurance agent route, so they can kind of help. They can talk to multiple carriers. Is that right?
Yeah. So So like locally in Rochester, and then they're a larger firm, they're a larger national firm, but I use Brown & Brown locally. So, they have a local office, local rep. My agent, he, as it turns out, is a good friend of mine. He does a great job. But they're also, they're able to shop to multiple carriers. So, every 2 years he takes me out to market, and, he's shown me like significant cost savings just from shopping the policy. And that's no work for me other than him just saying, hey, do you want to go with this carrier? It's going to save you 30%.
Yeah, that is great tactical advice for sure. All right. I know what's next, but what's next for you? What do you got? What's cooking under the hood?
Oh, I don't know. We were talking earlier. My business partner and I are looking at diversifying a little bit, and we're possibly we're in the process of looking at some FedEx routes that we might be acquiring. We're going to dip our toes there, see how that goes, and if that becomes something that's scalable, we'll continue deploying our resources there. But it's funny. Like every couple of years, I feel like I want to do something, and I tell myself this is the last one, but I'm sure there'll be something after that too. I have a great management team underneath me that helps a lot.
Yeah. And I mean, I think you've proven yourself, right? For whatever you get involved with, you know what to get involved with, number one. And then number two, you've got a great track record. So I have no doubt whatever's next for you.
Winners.
Yeah. No, well done, man. Well, I appreciate you joining the
podcast
and hopping on here.
Yeah, for sure. It's great to catch up too.
Yeah. You have a more amazing story than you know. So congratulations.
Thanks, Mike. Appreciate it.
All right, man. Take care.
Thanks.
That's a wrap. Hope you found a nugget or two in there that can help you on your franchise journey. And if you ever want to talk franchising, reach out to me anytime.